Throughout history, the rise and fall of great powers isn't just a story of military might or cultural influence. It's a story written in currency, debt, and economic dominance. For over 500 years, a predictable financial pattern has governed the globe, passing the torch of power from one empire to the next. From the age of exploration to the digital present, the cycle remains startlingly consistent. A nation innovates, dominates global trade, establishes its currency as the world's reserve, and then, burdened by the very weight of its empire, begins an inevitable decline. This is the story of that cycle, a 5-century-long saga of ambition, wealth, and collapse. And at its heart lies a critical question for our time. Is the U.S. dollar, the undisputed king of global finance for nearly a century, now facing the same historical forces that brought down every empire before it? The story begins in the 15th century with a small but ambitious seafaring nation, Portugal. Fueled by revolutionary advancements in navigation and shipbuilding, Portuguese explorers charted new sea routes to the east, bypassing the old trade monopolies and unlocking immense wealth from the spice trade. Their innovation didn't just bring back pepper and cloves, it established a new model for global power, one built on controlling the arteries of commerce. The Portuguese escudo became a trusted currency in ports across the known world. But their reign was fleeting. Portugal lacked the population and resources to manage its sprawling network of trading posts. It became overextended, its defenses spread thin, and soon a larger, more aggressive neighbor was ready to seize the mantle. That neighbor was Spain. The Spanish Empire rose on a wave of silver, a torrent of wealth unlike anything the world had ever seen. The discovery of the massive silver mines at Potosi, in modern-day Bolivia, flooded the global economy with Spanish reals, the pieces of 8 that became the world's first truly global currency. Spanish galleons, laden with treasure, projected an image of invincible power. For a time, Spain was the undisputed master of the world, its empire stretching from the Americas to the Philippines. Yet this river of silver became a curse. The influx of wealth led to rampant inflation, stifling domestic innovation and industry. Spain became a nation of consumers, not producers, relying on its colonial riches to finance endless wars across Europe. As the silver mines dwindled and military defeats mounted, the empire's financial foundations cracked. Overburdened by debt and unable to adapt, the Spanish giant stumbled, creating a power vacuum that a smaller, more dynamic nation was eager to fill. Enter the Netherlands. In the 17th century, the Dutch Republic pioneered a new kind of empire, one based not on conquest and resource extraction, but on finance and trade. They were the masters of capitalism. With innovations like the first stock exchange, the Bank of Amsterdam, and the Dutch East India Company, the world's first multinational corporation, they built a commercial empire of breathtaking efficiency. The Dutch guilder became the currency of choice for international merchants, valued for its stability and backed by the most sophisticated financial system on earth. Amsterdam was the undisputed center of global finance. But, like those before them, the Dutch eventually succumbed to the pressures of maintaining their position. A series of costly wars, particularly against a rising England, drained the Republic's coffers. Their competitive edge in trade began to erode, and the financial center of gravity slowly started to shift across the English Channel. The British Empire perfected the model its predecessors had established. The Industrial Revolution, born in the factories of Manchester and the coal mines of Wales, gave Britain an unprecedented technological and manufacturing advantage. The world became a market for British goods, and the British Navy ruled the waves to protect the trade routes that carried them. The pound sterling, backed by a steadfast commitment to the gold standard, became the bedrock of the international financial system. To hold pounds was to hold gold. It was the ultimate symbol of security and trust. London was the world's banker, financing everything from American railways to Argentine ranches. At its zenith, the British Empire seemed permanent, an unshakable pillar of global order. But the cracks began to show. The immense cost of 2 world wars bled the empire dry. Britain, once the world's biggest creditor, became a debtor nation, owing vast sums to its former colony, the United States. The weight of maintaining a global military presence and a vast colonial administration became unsustainable. The gold standard was abandoned, and the pound sterling's dominance began to fade, setting the stage for the final act of this 500-year cycle. The transition of power was formalized in 1944 in the quiet town of Bretton Woods, New Hampshire. As World War II drew to a close, delegates from 44 allied nations gathered to design a new global economic order. The United States, with its industrial base untouched by war and holding over 2/3 of the world's gold reserves, was the only nation capable of anchoring the system. The Bretton Woods Agreement crowned the U.S. dollar as the new world reserve currency, convertible to gold at a fixed rate of $35 an ounce. For the next 3 decades, this system provided a period of unprecedented global growth and stability. The dollar was as good as gold, and the world trusted it implicitly. But the familiar pressures of empire began to mount. The costs of the Vietnam War and expansive domestic social programs created immense financial strain. The U.S. began running significant balance of payments deficits, meaning more dollars were flowing out of the country than were coming in. Foreign nations holding vast sums of these dollars began to worry about America's ability to honor its promise to redeem them for gold. The tipping point arrived in 1971. Facing a run on its gold reserves, President Richard Nixon made a stunning announcement. The United States would unilaterally sever the dollar in its link to gold. The Bretton Woods system collapsed overnight. Yet the dollar did not fall. In a masterstroke of geopolitical and economic maneuvering, the U.S. established the petrodollar system. By securing an agreement with Saudi Arabia and later the rest of OPEC to price oil exclusively in U.S. dollars, Washington ensured that every country needing to buy oil would first need to acquire dollars. This created a permanent artificial global demand for the American currency, allowing the U.S. to run massive deficits and accumulate debt without the same consequences that had crippled past empires. The dollar was no longer backed by gold. It was backed by the world's non-negotiable need for energy. This has been the foundation of American financial dominance for the last 50 years. Now that foundation is being tested like never before. The same forces that ended the British Empire's monetary reign are echoing in the present day. The United States is now the largest debtor nation in history, with its national debt spiraling to previously unimaginable levels. Decades of deindustrialization have eroded its manufacturing base, making it heavily reliant on imports. Geopolitical challengers like China and Russia are actively working to create alternative financial systems and conduct trade in their own currencies, chipping away at the dollar's hegemony. The weaponization of the dollar through sanctions has pushed other nations to seek out financial independence, accelerating the process of de-dollarization. The trust that once underpinned the dollar's rule is eroding, replaced by a growing sense that the system is unfairly weighted in America's favor. The world is witnessing the familiar symptoms of a late-stage empire: overextended military commitments, soaring debt, and a hollowing out of its domestic productive capacity. Is the dollar, therefore, entering its final phase as the world's reserve currency? The historical pattern of the last 500 years suggests that no empire's dominance is permanent. The cycles of innovation, peak, and decline, driven by debt and overextension, appear to be a fundamental law of geopolitics. The question is not if the dollar's reign will end, but when and how. Will it be a slow, orderly transition to a multipolar world with several competing reserve currencies? Or will it be a sudden, chaotic collapse, triggered by a financial crisis or a geopolitical shock that shatters the world's remaining faith in America's ability to manage the system? Or could there be another path? Could the United States, facing the precipice, reinvent itself once again? Could a new wave of technological innovation, from artificial intelligence to green energy, revitalize its economy and reassert its leadership? History offers a clear warning, but it does not write the future. The choices made today in Washington, Beijing, and capitals around the world will determine whether the dollar follows the pound, the guilder, and the real into the pages of history, or if it will defy the 5-century cycle and forge a new destiny. The answer will define the global order for generations to come. Subscribe to this channel for more financial mysteries.